Hello, everyone. Thank you for joining us for another special episode on Stocker Team, the Investors Channel. Today, we have a very special topic. Every topic on our show, on our channel, is always special because we look for the most important piece of information and we analyze it, we break it down so you can make informed decisions. You can also use that as a launch pad to do your own due diligence. The topic I have on this show, on this episode, is Klarna IPO. Klarna is a buy now, pay later business. Which has really taken the world by storm, especially before and around or during the global lockdown, the COVID-19 lockdown that actually happened. Klarna gained popularity and also came into prominence in the global e-commerce scheme of things. So this company has now come of age and they are coming into Wall Street to launch one of the most talked or sought after IPOs, initial public offering, on Wall Street this year. So before we get into the full analysis of this IPO, I will just make a quick disclaimer. This information or any information we share on this channel is for education and information purposes only. Do your due diligence or consult your financial advisor before making any decision. Thank you so much. If you haven't subscribed to our channel, subscribe, put on the notification bell. Also join us on Stocker Team Live on X, where you can get all the breaking news moving the market and as well your portfolio. So Klarna is coming into the market with its IPO. It will be launching its IPO to come as a public market, a public company for the first time. It is a company that has a whole peculiarities. It also has a key competitor which I am exposed to. I'm going to be talking about the competitor vis-a-vis the case for Klarna IPO. What do I think about the IPO? What are the risks involved? What are the opportunities? The valuation, the pricing structure of this IPO, and as well the company to actually give a proper context. And we are also going to be looking at a very important chart just to give you an idea of why I think this IPO is either a buy or a hold or a sell. So let's jump into the show for today. So Klarna is a Swedish fintech company. The company specializes in buy now, pay later business, which is fondly abbreviated to BNPL services. The company has now filed its initial public offering. Basically, when a company comes to raise capital in the public market and it wants to actually trade his shares in the public market, that's the IPO, and it will be launching on Wall Street in the US, and we are going to look at the context, the in-depth analysis of this IPO so that you can make your own informed decision. If you look at the history of this company, as a Swedish company, it has its own management. Sebastian Simaskovsky, let me pronounce that well, the co-founder of Klarna and the CEO, he currently leads the business with Michael Morris, who serves as the chairman. Their leadership really has been pivotal to the growth and the strategic direction of this business. The IPO actually aims to raise about $1 billion, which will value the company at about $15 billion. Actually, just to put things into perspective, Klarna actually revised this IPO pricing further down. It was a significant decrease from about 46 billion. So they've actually shaved almost more than almost more than 100%. Of the initial pricing has been shaved off, and the valuation in 2021 was actually pricing, valuing Klarna for almost 50 billion. But a whole lot of things has happened. The inflation that was exacerbated by the Russia invasion of Ukraine really dealt a huge blow to companies that are not making profit, companies that are in the private market. Many of them were actually devalued because a lot of customers had to pay higher interest on credit card loans, on loans. Borrowing costs increased. So inflation really dealt a huge blow to Klarna. So, and that's why the IPO is is being priced at about $15 billion. The proposed share pricing is going to be disclosed, which once it is disclosed, vis-a-vis the valuation, it will put things into proper perspective. But investors are actually still holding their breath for that. With the market capitalization of about $15 billion, this will actually more or less position Klarna as one of the major player, if not one of the biggest, youngest or biggest fintech company to be listed on Wall Street. I'm going to be looking at Klarna's balance sheet vis-a-vis the competitor that I mentioned, which you can see, Affirm. The ticker symbol is Alpha Foxtrot Romeo Mike, Affirm, AFRM, and Klarna will be listing under the ticker symbol Kilo Lima Alpha Romeo, KLAR, on Wall Street. So I'm going to be looking at side by side, like for like, orange for orange, apple for apple. How does Klarna really look vis-a-vis in terms of going under the hood to look at the books of this company? So join me. And if you haven't subscribed to our channel before I go into that, please subscribe, put on your notification bell so that you don't miss any updates. Please also feel free to share this video with anyone so that they can also benefit from all the information that you have been getting from the channel. So Klarna really, when you look at the business in comparison with its major competitor that is already listed in the market, in December 2024, which is fourth quarter of last year, Klarna reported about $3.7 billion in cash and cash equivalents. So it looks like the business really has some liquidity to fund growth and also withstand perhaps medium to near term risks such as higher inflation, recession, maybe in the US, geopolitical tensions have actually increased borrowing costs, which will actually affect Klarna's business. I'm still going to talk about the business model. Well, let's just continue with the like for like. But within that period as well, it seems Affirm, which is the direct competitor to Klarna, had about $1.2 billion in cash and cash equivalents. In receivables, which is the backlog of the funds, revenue that the company is still expecting to come in. Around that period, Klarna claimed, it's still a claim because they are not yet public. So they reported that they had about $8.6 billion in receivables. Around that time, Affirm actually had far less in terms of their receivables, and they had about $353 million in receivable. I'll also be looking at the liabilities of the company, so just join me as I also look into that. So with about $13 billion in assets, Affirm Klarna had about $13 billion in assets. Around that period as well, Affirm reported about $99.5 billion in assets, which was actually as of June 2024. The liability side of things is quite interesting, And please, this is also part of the most important part of this analysis. Klarna had about $11 billion in liabilities, total liabilities, and Affirm around June last year reported about $4.8 billion in liabilities. Now, before I make my judgment or conclusion about why this IPO might be a buy or a hold, I'm also going to paint a particular picture as to why this business might also have its own share of risks that you as an investor need to pay attention to. So buy now pay later is a revolution to say. It's actually a culture that is now very prevalent, especially looking at the millennial population and also Gen Z population. It also enable a whole lot of low income earners, a whole lot of upwardly mobile young people across different markets to actually still more or less be able to actually afford a whole lot of fashion items, from Nike sneakers to any major fashion item, even smart devices, personal wearables, personal care products, beauty products, fashion products. However, there's a whole lot of regulatory challenges, especially when it comes to the lending practices that the company might actually use, which might be a bit more aggressive or a bit more less conservative compared to traditional lending or buy now pay later model that people are used to, especially credit cards and getting loans to actually buy stuff. So if you also look at the competitor or big competitor risk, the likes of Amazon, they continue to actually increase the kind of services they offer. As of last week, Amazon actually announced that they will be going into the second-hand car market business, which means Amazon will actually start listing used vehicles on its platform. That's a huge blow, perhaps, to the likes of Klarna, to the likes of Auto Trader, and any other car or second-hand car market that online. So Klarna Affirm they are exposed to these risks. So should Amazon say, oh, we are going it alone, we are launching Amazon buy now pay later, or Walmart buy now pay later, that might actually really diminish the ability of Klarna or even a firm that's been in the market, in the public market, to actually withstand that competition in the short to the mid to the long term. The opportunities for me is that Klarna seems to be very, very shrewd. They also have that ability to execute beyond the US. Klarna actually is present in over 25 countries compared to a firm that is more North American focused. So Klarna has that opportunity or the ability to execute. They are a bit more similar to what Robinhood is doing. They actually understand how to expand, how to actually enter new markets. So they could actually have that base to execute faster and more efficiently across market, thereby broadening the risks, reducing the risk, because the concentration risk, is not too good for a company that wants to actually execute on a global scale, to be too exposed to one market, which is the US. So Klarna, being a Swedish company, has been able to, win a whole lot of business out of the US in different continent, at least 25 countries. Now, here is my quote unquote judgment. What do I think about Klarna's IPO? IPOs are very, very special kind of security or stocks that you might actually want to buy as an investor. Sometimes IPO might not be suitable for every investor, depending on your financial goal, your portfolio strategy, your overall approach into investing. So for me, I have more or less stopped buying IPO unless I want to actually perhaps have an exposure to a stock for a very short term period, and that has to be a bit more managed, targeted, or a bit more orchestrated. So what do I mean? You don't necessarily want to buy a stock when it's coming out as an IPO. So for an example, Meta, which was used to call Facebook, was formerly called Facebook, listed in the stock market a couple of years ago, and the stock, went so high. There was a glitch during the IPO, technical glitch and all that, but a whole lot of investors in the short period of time lost close to about 30% of their investment in Meta, the the former Facebook, because IPOs are majorly when the existing investor who have invested in that company during the private period try to actually exit to take some money off the table. So there's some selling that actually happened a few months after the IPO that might actually put pressure on the valuation of the business. Also, when the business is also sharing more updates, investors might actually be spoofed by so much more information, transparency that has now come to the business. So unveiling or lifting the veil is actually a very defining moment for these businesses, and some of them actually lose close to about 50-60% of the valuation. Now let me show you an example of what might happen to Klarna. The IPO might be very successful, but it doesn't necessarily last for too long, especially when a company is still young in the market. So let me show you this chart so that we can have it a close. We can bring it to a close and make the conclusion. So here is the chart, the chart of the stock price of Affirm. Affirm is the direct competitor of Klarna. Affirm listed some couple of years back. If you go to the all-time chart of Affirm, you can actually see that this company listed around January 2021, just after the lockdown, and you can actually see that the stock during the IPO was listed around $117 per share. The stock did as if it's going to go into the moon. Did spectacularly well when a whole lot of money was pumped into the financial markets, a whole lot of people sheltering in place, the lockdown, the reopening was still gaining momentum. So people had so much cash and they were doing a whole lot of buying, and a whole lot of selling was going on. So people also took on a whole lot of credit to buy this. So Affirm became so sought after because of the numbers they were doing. But if you look at the IPO of Affirm between that time, 2021 and today, Affirm actually has given away 57% of its market value. So that's just about 4 years. Yes, Affirm has some specific headlines, some specific challenges that it faced, but it's not anywhere different from what challenge Klarna must have been having, or the challenges with Klarna, because they are actually in the same type of business. Yes, the financing structure might be different, the management might be different, their positioning, their exposure might be different, but they are also in the same market. And the major risk to this business is inflation, recession, interest rates, monetary policy, and perhaps geopolitical tensions that might actually exacerbate or escalate some of those micro economic challenges I've mentioned. So if you are looking to buy Klarna's IPO, you might actually try and measure your exposure. Do you want to actually buy in a couple of weeks? And perhaps if there's a run to the upside, you can take profit or sell out and be on the sideline, wait for the lockup period, because the lockup period basically is the period when the existing investors who actually invested in the company, in this case Klarna, actually have to wait before they can offload part of their shares. Some of them are institutions, individuals, some of them are even executives of the company. So please, if you must buy IPOs, you actually have to understand the dynamics between that actually how it plays out. So for me, I would wait maybe for another 8 months to 1 year down the line to see if the company is going to be consistent with the numbers that it has shared with us before the IPO, during the IPO, and couple of quarters after the IPO. But a short-term strategy might not be bad, but you actually have to weigh your risks and also be a bit more measured as to the excitement, because on Wall Street, like we said, the bears make money, the bulls make money, but the pigs get slaughtered. Thank you so much. For me, it will be a hold for about 6 months, 8 months, or even 1 year down the line, depending on some of the dynamics. But that's it for Klarna's IPO. Thank you so much for watching. Thank you for joining us on this special episode. Before we go, I just want to also let you know, please continue to subscribe to our channel, put on the notification bell, share this video with anyone. Thank you so much. Keep investing, keep growing. Take care, and bye-bye.